Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Sanjana Prabhakar, Product Development Specialist with Nasdaq Investment Intelligence. She joins me to discuss the copper mining industry and changing dynamics. Sanjana, it's great to see you as always. Welcome back to Trade Talks and give us a quick preview of the mining industry.
Sure, Jill. Great to be back. So today we are covering all things copper. A quick preview of the industry. Demand for copper is expected to double from 2022 levels by 2035. So the outlook for the industry is very optimistic. Mining supply disruptions, the transition to green energy, along with macroeconomic factors such as the Fed rate cut, are likely to be bullish for copper in the near term. We thought it would be worthwhile to provide a quick preview of the index that we have that tracks the copper mining industry. It's the Nasdaq Sprott Copper Miners Index, ticker NSCOPP. So we just wanted to go into some details in our slides here.
Well, let's take a look at that. What's the 5-year performance look like?
Sure. So this slide here captures the 5-year performance of the Nasdaq Sprott Copper Miners Index and a competitor index tracked by Solactive. Its ticker is SOLGLOCO. And as you can see, both indexes have tracked pretty closely over a 5-year period, with the Nasdaq Sprott Copper Miners Index generating cumulative returns of 135%, marginally higher than that of the competitor benchmark. And we also wanted to go into some details of the performance of the index versus the direct purchase of copper in our next slide here.
Yes, let's do that because I'm curious to see how it performs, the index performs relative to copper commodity markets.
Yeah, so as you can see in this chart here, the performance is pretty impressive, with the Nasdaq Sprott Copper Miners Index outperforming the commodity copper by an impressive margin. As you can see, it generated cumulative returns of 135 percentage points over a 5-year period, whereas the direct purchase of copper via the spot commodity markets generated returns of 41%. And as you can see, while it generated an outperformance, the level of volatility of the direct purchase of copper was lower, and that's something that we wanted to flag.
What about the holdings? Where are they concentrated?
Sure. So in our next slide here, we wanted to provide some preview, some insight into the concentration of the top 10 holdings. And as you can see in the chart to the left, the top 10 constituents make up 74.6% of the index weight, whereas the top 10 constituents of the competitor index make up only about 50% of the index weight. So you can see that the Nasdaq index is more heavily concentrated at the top. We do have 6 constituents that overlap between the top 10 names of the 2 indexes, suggesting a moderate degree of overlap. And what I really wanted to highlight here is that the outlook for several companies in the top 10 appear quite optimistic. We have leading companies such as Freeport-McMoRan leveraging AI and ML across its mines to unlock production increases to the tune of 200 million pounds of copper and EBITDA increases of 350 million to 500 million per day. So those are pretty telling statistics. We have other companies in the top 10, such as the Ivanhoe Mines, which have indicated that they will actually quadruple their 2024 exploration budget to 90 million. So these efforts by the leading incumbents suggest that they are making changes to adapt to the changing dynamics of the copper mining industry, which I had highlighted at the beginning of the trade talks. We are likely to see a demand surge and production increase over the near term.
What regions does the Nasdaq Copper Index have exposure to?
Sure. So this slide here captures the geographic exposure of both the indexes. To the left, we have the country allocations of the Nasdaq Sprott Copper Miners Index. And as you can see, it's heavily tilted towards both United States and Canada. What differs between these 2 indexes? I think that's quite interesting, and I wanted to point this out. The Nasdaq Sprott Copper Miners Index has a relatively larger exposure to the United States, with an index weight of 30.8%, whereas the competitor index has only 10% of the index weight tilted towards the US. We believe that this relatively larger exposure to the United States is likely to be favorable to investors who may be encouraged that the US has proven to be more resilient than expected while dealing with headwinds from high inflation in 2023. Additionally, hopes for a soft landing are still alive, which is likely to boost overall sentiment.
Finally, I'm sorry.
Sorry. Yeah, another distinction we just wanted to draw between the country allocations is the higher degree of exposure to emerging economies with the Nasdaq Broad Copper Miners Index. You have a total index weight of 29% versus 20% for the competitor benchmark. And we believe that this differentiation in exposure towards emerging economies is also likely to be favorable. I mean, given that emerging market equities appear to be attractive with valuation discounts relative to developed markets near 30% and 40% respectively.
Finally, Sanjana, would you say that this index is more of a pure play exposure?
Yes, absolutely. And this final slide here captures that. As you can see in the chart to the left, 65% of the index weight of the Nasdaq's Broad Copper Miners Index is tilted towards companies whose primarily line of business is involved in the mining and extraction of copper. Whereas the competitor benchmark has a low degree of exposure, only about 40% towards pure play copper companies. Again, I think that this is quite interesting for investors who are looking to increase their exposure towards pure play copper. We wanted to show this slide to highlight that.
All right, Sanjana, I appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much.